Growth that pays for itself is rare in business, and Figaro Culinary Group just delivered proof. Stronger revenues, healthier margins, and a surge in operating cash flow mark a case study in self-funding expansion. Let's start with revenue. This quarter isn't just good, it's a fundamentally bigger engine. Group revenue accelerated about 16.8%, reaching 1.69 billion pesos, with Angel's Pizza dominating at nearly 1.47 billion pesos and provincial markets expanding. Provincial markets contributed 772.6 million pesos, expanding the group's geographic footprint. Angel's Pizza continues to drive scale, showing sustained brand growth. The franchise channel added royalty income approaching 10 million pesos, demonstrating how asset-light streams reinforce profitability. Margin expansion is the real highlight. Gross profit jumped 28.4% to 808.6 million pesos, with gross margin widening by 4 percentage points, a mix effect, not a cost miracle. Higher margin products, more single-order meals, franchise expansion, and new lines like coffee and packed meals all contributed. Smarter selling drove profitability despite rising direct costs. The most convincing signal comes in cash flow. Operating cash surged to 633.5 million pesos, with efficient working capital and a stronger profit base. Cash on the balance sheet rose over 54%, confirming real profit. The group stress-tested cash generation by paying over 100 million pesos in dividends, reinforcing sustainability. Growth does carry a price. Operating expenses rose sharply, tied to advertising, commissions, and depreciation. OPEX as a percent of revenue moved up from 23% to 29%. The company is actively spending into expansion, yet profitability improved, with net income rising nearly 11% and profit margin steady around 15%. Risks remain. Finance costs increased as borrowing supported new stores. Inflation in raw materials and wages adds pressure. The fundamental question for investors: are today's costs powering sustainable growth? Will product mix and franchising continue to lift margins? Can the network scale without sacrificing unit economics? Bottom line, Figaro Culinary Group is showing how a smart mix and disciplined execution can fuel self-funding growth. The story ahead will be about converting current spending into lasting operating leverage.